Welcome to Talk Tickers. IBM just dropped a quarter that really woke up Wall Street. So today, we're going to dig into why this old-school tech giant is suddenly the talk of the town, and more importantly, what it means for you. Wow, look at that. Up over 6.5% after hours. Now that is not just some random blip, folks. That's the market screaming that IBM's turnaround story, yeah, it's real and it's got legs. So let's get into the numbers that lit this fire. All right, so what's the big headline here? It's a classic decisive beat and raise. And look, we're not talking about squeaking by expectations. No, IBM basically came out and told the market, hey, that bull case you were building, it's not just working, it's hitting the accelerator. Okay, let's start at the bottom line, the earnings per share. The number was $4.52. Now the street, they were penciling in about $4.31. So this is a really solid beat. And it tells you right away they're running the business incredibly efficiently right now. And it wasn't just some cost-cutting exercise to get that earnings beat. Nope, the top line was just as impressive. Revenue hit $19.7 billion. That absolutely crushed estimates. We're talking a 12% jump year over year. For a company the size of IBM, that kind of growth, it definitely gets people to sit up and pay attention. But you know what? As good as those numbers were, that's not even the whole story. The real fuel for this after-hours rally? It was the guidance. What management said about the future. That's what took this from just a good quarter to a, wow, this is a great story quarter. All right, let's dissect this strong quarter. Where did all the strength actually come from? Okay, take a look at the breakdown by segment. Two numbers just leap off the page here. First, software up 14%. That is huge because that's their high-margin business, the core of the whole strategy. Then you've got infrastructure up a whopping 21%. That's all about a really strong mainframe cycle kicking in. And hey, even consulting chipped in with 3% growth. So this was a beat across the board, not just a one-trick pony. And this is the part I love to see. This wasn't just growth for growth's sake. The quality was absolutely there. Look at the gross margin, up 120 basis points. That's fantastic. And the free cash flow, my goodness, $7.6 billion in a single quarter? That just proves the point. IBM isn't just getting bigger, it's getting much, much more profitable. Okay, so beyond the numbers themselves, the conference call was all about one thing. One story management really wanted to hammer home. And that's their big transformation story, powered by AI and software. And it is really starting to pick up steam. And then the CEO, Arvind Krishna, dropped this bombshell. A generative AI book of business, now over $12.5 billion. Let that sink in. This is the proof point everyone was looking for. It shows that their AI strategy isn't just some marketing buzzword. It's translating into a massive, tangible pipeline of real business. And you can see that strategy playing out right here in the business mix. Software is now 45% of the entire company. Why does that matter? Because it means IBM is fundamentally changing. It's becoming a stickier, more predictable, and way more profitable company. And that is exactly the kind of story Wall Street loves to buy into. All right, let's get back to that guidance because this is really what got the stock moving. So here's the deal. Management came out and guided to revenue growth of over 5% and another $1 billion in free cash flow on top of this year's massive number. Now you compare that to what analysts were thinking, they were way more cautious. So by putting these numbers out there, IBM management basically de-risked the story for investors and said, hey, that momentum you just saw, it's not a one-off, it's going to continue. And they didn't just pull those numbers out of thin air. They have a plan. They're telling us to expect that all-important software business to grow around 10%. They see consulting accelerating. And all of that is on top of, you guessed it, more Gen AI adoption and continuing to cash in on that strong mainframe cycle. It's a very believable story. Okay, so a fantastic quarter, even better guidance. That brings us to the big question. Where does the stock go from here? What's our view? Yeah, after a report like that one, it's not really a question of if things have changed for IBM. The real question is, by how much? And what does it mean for the stock price? So our verdict is in. We're upgrading IBM to outperform. Plain and simple, we think this AI and software turnaround isn't just happening. It's got real sustainable momentum. And honestly, we think the market is still in the early innings of appreciating just how big this change is. So here's the thesis in a nutshell. As IBM keeps converting that huge AI book of business into actual sales, and as software becomes an even bigger piece of the pie, their earnings power is just going to keep going up. And when that happens, the market gives the stock a higher multiple. It's called a re-rating, and we think it's what's going to drive the stock toward those much higher price targets you're seeing from analysts. Okay, for our last bit here, let's talk about a trade idea. How could you actually play this? You know, as the pod analysts say to their PMs, here's a thought. So the trade is built on this idea of momentum. The thesis is that the stock's re-rating is just getting started. So how do you play that? One structure would be to look at longer-dated out-of-the-money call options. It's a way to get some torque, some real leverage to the upside as the stock keeps grinding higher. Now, what's the risk? Well, there are two big ones. First, a bad macro environment could slam enterprise spending across the board. Or second, IBM could simply miss on their own ambitious targets, like that 10% software growth. That's the stuff you got to watch out for. So there you have it, our breakdown of a really impressive quarter from IBM. The thesis is confirmed, and there's a lot to be excited about here as this story keeps playing out. Of course, this is not financial advice.